All right, everyone, welcome back to another thrilling episode of our podcast. Today, we're diving deep into the wild world of the financial markets and all the little nuances that make it tick. Think of it as a roller coaster ride, but instead of thrills, we're strapped in with charts and numbers. Let's kick things off by discussing the macro environment and how market sentiment is shaped right now. Recently, we've seen the 10-year Treasury yield hovering around 4.0 to 4.1%. It's a little like trying to read a mood ring. Sometimes it's glowing, and sometimes it's not.
Whoa, wait. So, a mood ring? Are we talking about those from the 90s? I remember my friend had one that turned green when she was like happy or something. So why does this matter with the Treasury yield?
Haha, exactly. Just like how a mood ring reacts to your temperature, the yields react to inflation and economic expectations. And when we talk about the 2-year yield at about 3.5%, we see this interesting inversion happening in the yield curve. It's like a pendulum swinging back from deep inversion to what we call a slight positive slope, implying a shift in expectations of future growth. It's signaling a bit of confidence.
Oh, wow. I didn't even think about a pendulum. I mean, I always thought of the economy as like a car, sometimes revving and other times stalling out. So, if the yields are changing, does that mean the economy is moving faster or something?
Yes, exactly. You've hit the nail on the head. It's like a car winding up for a race. When yields rise, it often means investors might be expecting growth, making it a mixed bag. But hold on, let's switch gears just a bit. Have you heard how the dollar index has been rebounding recently? It's like watching a heavyweight boxer come back in the ring.
A heavyweight boxer. Now that's a visual. So, is this dollar rebound good news? Or does it put, like a chokehold on the market?
Good question. It can be a bit of both. A stronger dollar can benefit consumers when importing goods, but it also makes exports more expensive. Get this double-edged sword effect. Plus, with M2 data hitting new highs, liquidity is slightly increasing. But that doesn't mean it's all flowing into stocks or crypto at this point. It's like everyone's at a party, but nobody's dancing yet.
I can't believe it. So are you saying the party might be pretty packed, but people are, like, just standing around sipping their drinks? So what's influencing this, like, hesitance?
Exactly right. When we look at the volatility metrics, like the VIX, hovering in the 20 to 21 range, indicates a market that's nervous, but not in a full panic mode. In fact, the crypto fear and greed index is showing about 12, which places it in the extreme fear zone. It's quite the cocktail of emotions, right?
Extreme fear? Oh man, that's like when you're about to jump off a high dive but then suddenly rethink it. So, what's the deal with tech stocks now? Are they like the brave ones on the cliff? Or just wait, are they the ones refusing to jump?
Oh, that's such a great analogy. With stocks like Tesla and Nvidia, the tech sector is definitely shaken up. Tesla's demand is under pressure even as it reaches around $417.78. It's like peering over the edge but holding back. And Nvidia? They're riding the AI wave, but the tides are unpredictable right now, you know?
Right. So they're surfacing, but with some pretty gnarly waves? So then, what happens with BTC and ETH and all of this? Are they like the surfing champions? Or the ones just kind of treading water?
A bit of both, honestly. Bitcoin's hovering around $88.276, experiencing some serious turbulence with net outflows that make it feel like the tide's pulling away from the shore. Ethereum's in a cautious spot as well, as institutions are weighing their options carefully before they leap into the waves.
Whoa, that's a lot of pressure. So it's like they're fidgeting on the edge of the surfboard, huh? So, what can we expect moving forward with, like, the overall direction of the market?
Well, if there's one thing we know, markets can be as unpredictable as a cat on a hot tin roof. There's a lot to keep an eye on, especially with export control discussions and how the economy holds up against price pressures. It's going to be a wild ride, so buckle up.
Whoa! Okay, this is going to be one for the books. Can't wait to see how it all unfolds.